Hello, what up my people? Welcome back to my channel once again. So today I'm going to be sharing my trade recap on gold, and the trade recap starts from 14th July 2025, that's on Monday, to 18th July 2025, that's Friday. So we'll be analyzing 5 trading days for this 5 trading days. Okay, so the market actually starts from this particular junction here, and we had a market open gap here. We have a gap here. So irrespective, what I was waiting for was a reason for us to short the market to cover this particular gap. So what I was waiting for was this particular candle was created at around 12:15 a.m. and at around 1:30, 1:40 a.m. I was seeing rejection. So I waited for this particular candle that was created at around 1:55 a.m. At around 2 a.m. instantly, immediately 2 a.m. the market came back and tapped us in on this particular order block here, and that was how I actually caught this 6:1 RR. So this is also time and price, but if you have idea of this financial market, you would know that anytime a market opens and we have a gap, immediately there must be a cover up for that particular gap. So that was what I actually followed. I followed the cover up of this gap. So that was that for the Asian session on Monday. That was the first trade that actually gave us a good momentum. So for the second trade, I caught this second trade on London session. Now, normally if I see this kind of formation, immediate buys and an immediate sell, that's a resistance for me, or should I call it a support? Either support or resistance, anyone you call it, depending on the formation that you saw it from, either from bullish or from bearish. So for this is a resistance for me. So I drew my line. This is my resistance line. I had idea that this market was going to be hold on around this place. So my second confluence was my OCL. This particular OCL on the lower time frame, probably on the 1 minute time frame, this is another block. So you call this a decisional order block, but for me, this is an OCL for me. So what I did was that I actually kept my I was ready for the market. Immediately I saw a tap into this particular OCL, I actually did a market execution, and that market execution was what got us this particular profit. We actually closed on a 6:1 RR, and immediately the market tapped us in on this particular resistance. It gave us a 6:1 RR immediately. On the third trade was actually caught on fib level. I caught this trade on fib level. So I marked my swing high and my swing low, and irrespective, it gave us a 1:1 RR, but immediately it gave us that 1:1 RR. It started falling. And this fall, don't forget, this particular fall was on a New York session. Can you see the volume? The fall was on a New York session, and that is how we actually traded on Monday. We took 3 trades, we won 2 and we lost 1. And fast forward to Tuesday. So for this Tuesday, I had some confluence, especially with this psychological level, and I also caught an OCL here. But the market actually also gave us a 1:1 RR and also took us out. So on Tuesday, our first trade was a loss, and irrespective, we wanted to actually also take this particular order block here. Can you see? Had it been I took this order block, I would have been out on this particular zone. But I did not take the trade because of this first trade that I lost. I was already having this kind of doubt already that, are you sure it's going to hold? Are you sure it's going to hold? Can you see? Let's even see, I targeted this zone. Yes, that's that's how we would have made a 5:1 RR. But this is not a clear setup for me. This is not a clear setup. Quite alright, this is inducement. This is order block. This is break of structure. It's complete, but I didn't take the trade. I did not take the trade. Can you see my resistance line is still the same thing here that actually hold on to the market. So irrespective, I did not take this trade. That's an SMC trade. I did not take the trade, but I lost one trade on Tuesday already. And with all this momentum, I didn't catch any out of it for Tuesday. That is how Tuesday went off. We didn't take any other trade after that first loss. After that first loss, we didn't take any other trade again. Yes, for Wednesday and Thursday, I did not take any trade, both Wednesday and Thursday, because for Wednesday I was avoiding CPI, and for Thursday I didn't see any clear setup for Thursday also. So that's why I waited for Friday. And for Thursday, normally after CPI or NFP, I normally wait for a support or resistance. Now for this particular Friday, this is where the Friday market opens. This is where the Friday market opens. And I always have these rules of double engulfing. Immediate buy and an immediate sell. Double engulfing. Buys and an immediate sells. I will also call this a double engulfing because it's also a A-shape. If we go to the line charts, you will notice that the two of them are both A-shape. But now, what will give me confidence to use these two A-shape to enter a trade? Time and price. That is the confidence here. Time and price is what will give me confidence to enter these two A-shapes. You don't just enter any A-shape that you see. That's one hidden truth. You don't just enter any A-shape. Time and price will give you confidence. So after seeing all these two A-shape, I marked the two and I waited for London session. I waited for time. Can you see this support zone? This support zone now was tapped in at around 7 a.m. That's London open. That's 7 a.m. London open. London session it's just about to just start. But I need you to understand that sometimes they manipulate around 7 a.m. then distributes around 8 to 9 to 10 a.m. Sometimes they manipulate around 8 a.m. then distributes around 9:30 to 11, getting to 12. So you need to always look at time. Time will give you better confidence on which trade you're supposed to enter or which trade you're supposed to actually take note of. So for this particular Friday, this was my resistance, this was my support, and when the market came, it tapped into this support immediately and gave us immediate 6:1 RR. Rallied the trade from this zone to this my psychological level, and when it broke my psychological level, I was also waiting for a nice order block here that was created to be tapped in. And what did the market do? The market came, tapped into this order block. At what time? Take note of the time. What time? 9:15 a.m. Can you see the expansion? It manipulated at around 7 a.m. Isn't it? After it manipulated 7 a.m. distributed up to around 8. Now this particular order block candle was created 8:25 a.m. Can you see what happened? Started distributing at around 9. So this is what I'm talking about. Manipulation might happen around 7. Manipulation might happen around 7. Consolidate till 8 p.m. and start distributing by 8:20 or 8:50 or 8, depending. Start distributing at around that time. So you need to always look at the time factor from 7 a.m. London session to at least 9 a.m. London session. That's where you need to be looking for your entries. To 10 o'clock, if you don't get entry within that short period of time, just stand up. You don't need to trade London session anymore. You wait for New York session. New York session manipulates around, sometimes manipulates around 5. Sometimes manipulates around 12. It consolidates for like probably 40 minutes or getting to an hour. Then maybe it starts distributing by 1 p.m. or maybe 1:30. That's when it starts distributing. So you need to factor your timing in all your trades. Time would also make you not to overtrade, because now if you have time as one of your factor, that means you are only locked in to 2 trades in a day. You trade on London session, you trade on New York session. So that means you are not really putting too much energy to see how do I put it? You are not putting too much energy on looking for setups. You are only putting more focus on time. Yes, so that's it for this week, and thanks for watching my trade recap, and I'll see you on the next one. Peace out.